All right. Morning, everyone. Kick it off today. Let's have uh, a new day today. Well, fresh day after some renewed volatility in markets. All right. Yeah, we're looking at the session from last night. I mean, you can see there, obviously at the beginning of the session, we saw a heavy push down in U.S. markets with the S&P and the Nasdaq both taking beatings. The real underperformer once again being the Russell 2000, which is down well over 1%. We've seen I think the Russell closed down now down over 10% from the highs, which puts it into correction territory, technically speaking. You can see there that all the sectors are down really across the board. The interesting thing was the Nasdaq didn't really underperform the S&P on a heavy sell-off day. So that to me is interesting. I'm gonna take note of that. And just put it in the little mental bank going forward. But I think it's interesting nonetheless. We had a lot of data out yesterday, and for the most part, the data came in very solid. We did have industrial production that was a little bit weak, but we had Empire manufacturing that was better. We had CPI actually came out a touch hotter than expected. We had initial jobless claims that was really good, the lowest reading since 2007. And in all of that, which should, if anything, get the Fed hiking rates sooner rather than later. We saw a Treasury rally again in the States. Jeff Gundlach, who they call kind of the bond god of the world at the moment, actually is calling for the biggest short squeeze of all time in the Treasury market. And he's saying, and the readings from all of the major brokers across the globe show that that's the biggest one-sided position that they have. So I think it's very much set up for that. And that's probably the reason why we continue to see treasuries rallying, is simply because everyone's positioned on the other side of it. So it's kind of impossible for it to really go the other way. All right, moving on to the Asian session. We saw a good sell-off there out of the Nikkei overnight. Australia was down a little bit. Shanghai actually think finished closer to flat, and the Hang Seng also down about 0.25% on the day. We did have India, which rallied hard, up over 3% on the back of potential of a kind of coalition government between parties forming there. The market really liked that. But other than that, there wasn't a whole lot really driving Asian sessions. We did see Chinese data showing that the highest level of bad loans in 9 years. No surprise, we continue to see negative data coming out of China. And foreign direct investment numbers were also weaker than expectations. So the numbers in China continue to come out soft. I mean, this is no question that the economy is slowing there. But we'll just have to wait and see if that's actually going to play through into the markets. Interesting chart here from Charlie Bilella. This shows with 373 days now that we've been above the 200-day moving average on the S&P 500. That's the longest streak in 50 years. We're obviously, even if we fall the next few sessions quite dramatically, we'll still remain above the 200-day moving average. So we're really going to have to see a proper correction. But I think this is really important to just show how long in the tooth this rally has become. Technically, we've just hung at such a high level, at such a premium for so long. It doesn't mean we're going to correct right now, but I think it's just important to keep in the back of your mind. Really interesting chart there. Okay, there's no corporate action to report today that I know of. In terms of market data, we have Japanese industrial production this morning, which is slightly better. Capacity utilization month-on-month numbers also a little bit better than the prior numbers. We've got trade balance out of Italy later, as well as the rest of the Eurozone. And then the states, we've got housing starts, building permits, and University of Michigan consumer confidence. But nothing probably that's going to really get the needle moving from the market data side today. So we're going to follow on the action that we saw yesterday. We're going to see how the market reacts to that. We're going to see if there's a second day play in it. And there's a couple interesting levels on some of the local stocks that we'll have a look at here as well. that could potentially come into play today. So let's have a look there real quick at the maps. All right. First thing we're going to have a look at is, the chart's already up here, is the VIX. Looking at, this is a 2-year chart here, and I think this goes without saying. The level is quite clearly right here at 12 bucks. I mean, obviously we had this tiny little blip below it, but I mean, you're running back. I mean, how many times have we freaking bottomed out here at 12 on the VIX? Last night we saw a hard spike. We were up 8% at one point. I think we were up north of 11% on the day on the VIX. You can see here in this green bar, really starting to turn the corner here. And I think I think what's interesting as well, if you look here in terms of the spikes up on the VIX, you can see how spaced out these spikes have been. Remember, we haven't even had a dramatic pullback on the S&P for the last 2 years. So these all happened with us still staying north of the 200-day moving average. Imagine what happens if we drop the 200-day moving average. Anyway, the length, the distance between these sort of peaks in the VIX are starting to look overdone, and it's also starting to look like the time that we should start to see another spike up here in the VIX. So it kind of seems like that's lining up a little bit. We'll have another look at the chart of the S&P 500 real quick. I'll shorten that up to a year, and we're really kind of making a let's just pull this back a little bit. We're really making a rising wedge here in the S&P, which I think until we can pop out of this one way or another, then we'll probably we'll probably continue along this journey. In fact, you can probably even draw this all the way back somewhere along here. Not quite, but either way, definitely a little bit of a rising wedge pattern, and it's starting to narrow out here, as you can see there, which is really good that we're starting to tighten up a little bit. It'll give us an idea sooner rather than later what's going to happen. I think we're looking for maybe a drop of 1855 to make it safe. I would look for this level to drop, which to me was the most important level that we've looked at over the past 6 months, and that's 1850. So drop below 1850 really kind of comes in line quite nicely as well with the rising wedge support, and drop below 1850 to me would really signify an opportunity for a real sell-off to finally come in the S&P. So watch that level at 1850. I think it's very significant. I'm going to watch that one closely over the next couple sessions. All right, let's look at Cecil. Cecil, we have looked at the last couple sessions again yesterday early. We saw it come up and kind of get close to testing the 600 level. Starting to look almost a little bit like a little rounded reversal here off of the 600 level, and definitely looking potentially very double topish there. You can see, let me just pull this forward a little bit. You can see that we were literally right at trend support on Cecil, and I think if we drop trend support, especially if we can drop the, what level is that, the 585 level here, then I think we can trade all the way down to 560. Like I said, we're right at support here. We drop 585. To me, we're straight shot to 560, which would really start to make this chart looking quite double topish. All right, we'll have a look at ABI here. ABI has been putting in some consolidation for probably almost 2 months now, up between 58 and 59 bucks. It's always when you have consolidation that's that tight. When you get a breakout, you always know how meaningful it is. And like I said, there's not a big upside target here, but I think that. I think that we're definitely looking for a little bit more out of this, and potentially kind of coming up to the top end of resistance here, maybe just above 60, 61, 62, somewhere in that neighborhood. Right, we're going to look at Steinhoff. Shorten this up a little bit. Steinhoff making a bit of a pullback. You can see it's starting to struggle around these levels with a lot more days a lot more red bars here around this level, and really this little flag or descending wedge that we had here, we're coming back down, and we're really testing support hard on that pattern. I think 53.50, which is 10 cents below where we closed last night. If we drop 53.50 and can start to push lower than that, then I think we'll at least come down at the very least and test 51 in the near term. And if 51 drops, then I think you can really get a sell-off at a Steinhoff. But this is a key level. It's not a bearish pattern by any means as of yet, but it's definitely at key support and one to watch over the next couple sessions. Okay, the last one I'm going to show is Anglos. I know we've looked at this chart a few times over the last couple of days. If we just look at the breakout that we had here, you can really see here 280 was our level. We popped out of this about 4 or 5 days ago. We broke out beautifully. Then the next day after we broke out, we traded all the way up to 294. Looked like we were about to take 300 any minute, and then we had a huge reversal from the 294 day, and we've come back down to test support at 280. I think we closed right around 280 and 11 says there, and we also support here on the recent uptrend. I think this is really important. This one also could end up looking a hell of a double topish if you look here. So 280 today. I would say maybe taking out the lows of yesterday. Let's just have a quick look at the lows yesterday over there in the top left corner. The lows were at 279, 278.99. So call it 279. If we take out 279 today to the downside, I think that this chart also can start to look very double topish. So, this is one to watch today. This stock could be in play. It traded really poorly yesterday, underperformed pretty much all the other miners, and I think there could be some it could be some interesting action today. Well, one way or another, we're going to make a nice move off of 280, I would assume. And if you look at it in the London price as well, we also are at key support there. Really the breakout kind of coming just a touch south of 16 pounds. We came down and tested that exactly yesterday as well, and then bounced up to close it at 1608. But that level is crucial. Call it 1597. 1598. If we drop there in London, same sort of thing, and you can run this chart all the way across as well, and it would be it kind of would be double topping out up around that 1650 level as well. So this is very important day for Anglos. I think today's make or break in this stock. Watch it closely today. It could be one of the more interesting names to play. That's it for today, guys. Thanks a lot.